So did the G20 steal your bank account? No, not exactly. But there's one thing I always maintained, that some of the larger financial institutions in the United States were some of the newly wealthy, like the bank, like Bank of America, you know, JP Morgan, whatever the hell it is. They're probably some of the most dangerous institutions to bank your money with because, well, just the type of crowd they're run with. Actually, I'm going to tell you as a recommendation, you're much better off usually banking with a credit union. And I'm going to post a link in the comments and also in the notes as to, you can look at the troubled asset ratio of a bank. It's something very important to look at. During the financial crisis, the troubled asset ratio was a major indicator if that bank was going to fail or not and then be taken over by the FDIC. The problem is with the G20 is the meeting they just had is they're basically moving away from the guarantees that they have, where the governments are guaranteeing the population's funds in the banks. I mean, FDIC is not being dissolved or anything like that. But, you know, if there's a major crisis that happens, the FDIC only has so much money to bail out so many depositors. And you, as a depositor, it's once you deposit your money in a bank, actually you are a unsecured creditor. You're not exactly like the money's there. And you are on the low end of the totem pole if the bank goes under. So the bank is making money off of loans if they have a lot of bad loans due to the economy turning downward. Like, you know, what happened in 2007, 2008. The predecessor for the economy's, the major financial crisis was the bust of the housing boom. And a lot of banks were in trouble because of not just mortgages, but all the money they lent to construction companies. And, you know, those projects all of a sudden lost, you know, their customers or whatever the heck it is. A lot of construction companies got upside down. And actually there was a lot of different problems that occurred because when there was escrow deposits were, because actually this even happened in the construction area, a lot of people lost their escrow deposits. Like if they put $20,000 down or more on houses, they lost that money because they were unable to obtain a mortgage on a home, which they previously had been able to do because the financial climate changed. And you know, you think, you know, you thought that was good as money as having money in a bank too, but they lost that money because they had an obligation to get a mortgage and they weren't able to fulfill that obligation, so they lost that. And then on the side where the people actually had the escrow money, they were losing out because the project, basically they had a half-finished project that could no longer be sold, that was stopped in midair, and everything that was done on that project basically turned to termite land or whatever the hell it was, or just decayed or whatever. And even when they got that money from the escrow, that had to be recognized as a gain. But there was a lot of heated discussion that it would not be recognized as a gain because even by, you know, I think they later ruled that the IRS even ruled that it was no longer a gain because it was due to extraordinary circumstances. So, if, you know, if a construction company was able to confiscate, you know, $15 million worth of escrow money due to more people that were customers that could no longer obtain mortgages, that money was not taxed because of an extraordinary circumstance. I believe that's actually how that was ruled. It was proposed, but I think it actually came out that way. That was actually ruled that way. But I just want to state this, that when you deposit your money in a bank, it's not like it's ever secured anyway. You're an unsecured creditor. You know, the only thing that's really guaranteeing you is the FDIC, the Federal Deposit Insurance Corporation, which does not have enough money to actually cover everything. But this G20 meeting is actually stating that you no longer, the government doesn't really have an obligation to bail out all the depositors in the event of a financial crisis. And, you know, that just may be how it goes. It just may be how it goes. Where it's going to be coming up, the next financial crisis is probably going to be worse. Like, we look at what's going on in the stock market, you know, even the major media is telling you this. And, like, I read a lot what's in the major media, because the major media, you got to dig into the major media. You got it, like, they're not like the major media when you're getting into individuals. But there's a lot of individual articles out there stating that the stock markets are way overinflated. They're pricey, the PE ratios are too high. And also, the only reason there's a lot of movement upward in the stock markets is because of QE. That does make a lot of sense, because the commodity prices, if there was a lot of industry going on, a lot of production going on, there'd be a lot of demand for commodities, not just oil, silver, gold, well, not coal so much, but silver, platinum, and palladium, but also copper, aluminum, lead, and zinc. And all the commodities are going down, right? Except in the agricultural land because of the drought. Like beef went way the hell up. But that's telling you that demand for commodities generally is not there, and that is telling you that the production's not there. And if the production's not there, why are the stock prices so high? That's because the banks have to invest someplace, and, you know, they're being propped up. The stocks are actually being propped up by the central bank spending. But at one point in time, what's going to happen with the major financial institutions when QE fails or interest rates go up, and, you know, like, there's, like, in other words, the demand for dollars is less and they have to raise interest rates? What's going to happen to the government's budget itself? It's basically what's going to happen is that's going to take a larger slice of the government's budget, just maintaining the debt. This debt swap, what do you call it, the twist, when it's just swapping short-term debt for long-term debt to get lower interest rates, that's coming, like, that was a temporary fix. And now, you know, the debt is coming to fruition faster and faster. They got to refinance them all the time. So the G20 is recognizing that a problem is coming up, and what they're saying is the governments are not going to bail out the depositors in the banks, basically, you know, if you want to get it right down to it. It's not that you lost your money or anything like that. Now, the thing is, if you take all your money out of the bank, that's going to be suspicious. The IRS will look at you, and if you're traveling around with lots of money, they got the civil asset forfeiture garbage going on with the police. You know, they find your money guilty, not you guilty, and they just steal your money. It's almost like you're screwed no matter what you do. Now, I'm not going to offer any real suggestions here on a lot of stuff, because I'm going to keep my mouth shut on that. But you're obviously being under the radar is one important thing you want to be. But just want to emphasize this, though, as a final better solution, because I know people are still going to keep their money in banks, to use credit unions and also use banks with less troubled asset ratios. And I'm going to post a link to where you can look up the troubled asset ratio of your bank. And you want to keep tabs on this, because when the situation changes in, you know, the financial situation changes, the troubled asset ratio is not going to stay like just because it was good last year. Doesn't mean it's going to be good every 3 months when they take this picture or whatever it is. It's going to be changing rapidly. And you want it, like, when the troubled asset ratio gets up to 90%, that's usually when the bank not guaranteed, when the bank starts to go under. It goes under. So you want to look for a bank that has a very low troubled asset ratio, and then you also want to look for a credit union, which is a lot more transparent than some of these other large, monolithic, megalithic, whatever you want to call them, financial institutions. Because they will steal your money, man. They will. They will. Anyway, and you know, you might want to invest in some other things like hands-on type things. You know, if you have the funds to do so. Like, I decided, you know, I want to get some of the welding tanks and stuff like that either this week or next week. I might produce some videos on that or something. The argon CO2 gas for make a true MIG welder and all this kind of garbage. And, you know, I'm going to actually probably get into a little more of the HHO, the hydroxy, hydrogen, oxygen deal for the cars. But also probably going to be purchasing a splitter that's going to split the oxygen into the hydrogen, and also use the oxygen to work as an oxygen source for an ozone machine. An ozone machine to get much higher quality ozone out of it. So actually, I'm going to invest my money in very more solid concrete things that'll last a long time, that can always produce and do me some actual good. So, you know, that's one way to fight the bullshit, because sometimes looking at an electronic blip on a screen, you really wonder, what is that really doing for you? Anyway, not much, right? So anyway, the end is not coming up right away. But let me put it to you this way. I just put a video out about Putin, silver and Putin's ace. Actually, Vladimir Putin, it's in his interest to have the Middle East kind of just blow up in flames, because that'll raise the oil prices a lot. And, you know, not to say he's going to do it, you know, but it is in his interest to do that, and that'll get him out of deep shit with the ruble going down and the oil prices going down and all that type of stuff, as long as, you know, it looks like Russia had nothing to do with it, right? As long as they had nothing to do with it. That might be the situation. I'm not going to blame him for that deal, because that's basically how all these guys do stuff. But if that happens, you might see a lot of situation change in the United States, as far as, you know, discretionary spending being available to people, and with the economy is going to start going, and that would affect the stock markets and everything else. It could happen all at once. And, you know, typically, not to be a bearer of doom and gloom, but what happens when the markets go down? They don't go like this. They usually go wham, they correct hard, and then eventually they start coming back again. And we're due for a very hard correction. So when that happens, people are going to be scrambling for cash. I don't know like how it's going to work out with the banks, but the deal is now that basically the G20 is saying an end to socialism, man. That's what they're saying. Government doesn't bail out anything, and, you know, it's going to actually cut down a lot on the government programs, and maybe that'll lead to civil unrest too. I don't know. It's hard to say. It's hard to say. You know, you've been hearing this crap for a long time, but it's almost like a lot of things, right? When people were telling people the tech boom was getting dangerous, nobody wanted to hear it, right? And all of a sudden, boom, overnight. People were telling people about the housing boom was getting dangerous. They didn't want to hear it. People were telling people that silver was getting dangerous, or gold was getting too high. People didn't want to hear it. But now it's corrected already, so it's the next time the bull market in gold and silver is going to probably go way the hell up there. And physical coinage is probably going to carry a premium over the spot price if we do have a lot of problems in the banking system. I'd almost guarantee you that. So anyway, over and out. I'm going to post that link on the the troubled asset ratio for the banks. I'll post that. And also, I'm going to advise people to just buy more hands-on stuff. If you don't have a mechanics tool set, you don't have like plumber's tools, electronic tools, you ought to be getting this stuff. You ought to be learning about it. And you ought to be more self-sufficient. I think that's 99% of the problem today. A lot of people are not self-sufficient. When you start thinking about what we actually use, what we actually do, what we actually need, you can pretty much, the average individual can make or do most of that stuff themselves. That's where you're going to see the industry of the United States go right back to normal again, where it's going to be a cottage industry of a lot of different entrepreneurs. And that's the real way to fight the New World Order. Really is. Hands-on. Hands-on all the way. And yeah, I want to give a shout out to one guy I respect a lot that I always watch his videos, is my friend Pete on Southwest Rod and Custom in a DIY auto school. One hard-working individual. If everybody in the United States worked that hard, we wouldn't have to worry about squat. You know, we wouldn't have to worry about squat. So just want to put a shout out to that guy, because I'll put a link down to some of his stuff. He's one of the few left. I remember way back when, just ad-libbing here back in the early 90s, when I was using my Harley when I got it in 89, and I used to beat the hell out of it, you know, and I don't do that anymore because it gets expensive. I have the whole engine because I basically trashed the shit out of it, you know, by racing it too much. I found out when it came right down as people actually rebuild Harley motors, even in Southern California, on the Evolutions at that time, it was like finding dodo eggs. Nobody did the shit, man. Everybody was selling you some glittery bolt-on crap, but as far as, you know, the actual freaking stuff that makes it go, hardly any people were doing that. So, you know, just word to the wise, and even this Jim Rogers guy is going to be right, that in the future, the hands-on people are probably going to be owning the earth, like the farmers and entrepreneurs that actually work with their hands. But when they work with their hands, they work with their mind. You got to be an engineer, basically, when you work with your hands. You got to understand, even if you're doing framing, what the structural stuff is. So much for toilet paper money. You know, it just might go right back to silver coin again, and we can make it go back to that. It doesn't have to be by decree. It's our own actions that can make that happen. Anyway, over and out.